Listen, it's happened to everybody, all right? You put a trade on in the market, whether it's a stock, futures, commodities, anything else. You think you're with the right direction in the market, it turns on you, and then you're stuck managing an underwater trade. Now, the bigger picture of how to prevent this comes from having a trading plan and having all these rules in place. But what if you don't have that? Or what if you have them, but you kind of ignored them? I'm going to show you how to turn that ship around, okay? And how to manage your underwater trade the moment you recognize it and the 5 steps to do. So before we look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in my video. So here we have 5 steps to managing an underwater trade. It all starts with graphically plotting your ticker on a price chart. So if you're newer to price charts, maybe you've made your trades based on fundamental data like company performance or the news, and you never really looked at the price chart, let me show you what that looks like. So here is my charting platform. I happen to use TradeStation. There's many great ones out there. And what you're seeing now is a graphical representation of the stock of choice. This happens to be one that a current coaching student of mine has an underwater position on, so I'm using it as our example. So this is DoorDash. Now, while everybody loves some good meal delivery, right? The stock has its own life and performance. The stock and the company are 2 different things. So the stock and its price are represented here. Each day is showing one candle that represents that day's price action, the high, the low, the open, and the close. And these are called candlesticks. It's a Japanese version of how we plot price data. There's also an indicator down below. That's my RSI power zones. And that's all I need on my chart. And that's all I recommend that you start with when you do this exercise. Okay. So if you already have my 4 zones RSI coverage system, you can bring in that RSI power zones. And if you're plotting this on any other platform, you can go ahead and see if I've got the RSI power zones version for you. Really, the primary thing you want to plot is this price data up above. Just facing the price data. Because guys, if you cannot even get yourself to plot the chart of the position in which you're underwater, you're not going to be able to work through the steps of management here. It's almost like a little grief cycle. Okay, it's like dealing with the loss and then taking action to, slow or lessen the bleeding. So we're facing the facts. We see the position. Now, this doesn't tell us anything about our specific position, right? So that's the next steps. You've got to come in and mark the date you opened your position. So this is on the presumption that you are doing a trade that's not a day trade. So on a daily chart, you would go back in time, look at your account statements and see, well, when did I actually get into this position? So in this case, with this example from this student, I actually have her statement that she shared with me, and I can see that DoorDash was entered long on May 13th. So I'm just going to go to May 13th, so I can see May roughly back here, and I eyeball, okay, there's May 13th. That's the day. So with that, I'm just going to kind of zoom in to the more recent action because everything we have to deal with is from that day onward. Right? So that's plotting the date of the position. And you just need a marker, something you can see. I like a yellow vertical line. It doesn't have to be complex. If you want, depending on your software that you use, you can adjust this to include a label that actually shows the date. But you can see because I use yellow, I can't see it that well. If I change this to another color, I'll see it better. Okay? So I'm going to change back to my yellow and proceed here. Once you've got the date of the position, because that's important, that's when it actually came to life and since then at some point became an underwater trade. The other thing you want to mark is the price at which you entered the position. If we don't know from where we are long or short, how can we turn this around, right? How can we better manage it? So come back to your chart and look at your information, just like I'm looking at this student's information. It says, okay, DoorDash, May 13th, cost basis, $74.96. So I'm going to take a horizontal line and I'm going to draw it and adjust it to be at $74.96 on the chart. That's the price per share at which she bought on May 13th. Now she happened to buy 100 shares, so it makes the math that we need to do beyond that pretty simple because it was a round number of shares. If you bought a number of shares that's uneven or not a round number, then the other steps you just have to consider that. Okay, but knowing that we used a round number here, I'm going to proceed. Now we get into the thick of it. Set or reset a max loss amount. Now here's what I mean. When this trade was put on by this particular student, it was with a max loss of 10%. Meaning, if you went long at $74.96, and in this case, since it was 100 shares, it was a round number, then 10% would be 10% times 74.96 subtracted from 74.96. So let's look at that on a calculator. 74.96 times 0.1, so $7.49. And we want to subtract that from 74.96. So 74.96 minus 7.49. That's 67.47. So 67.47, again, using this particular student's example of a 10% stop. Yours might be different. But if you want a guideline to start with, consider using that type of approach. And 67.47 being that number, I'm going to put a red line to just visually represent where this position should now be managed at the current time we're at. Because now we're in the future, right? The past is the past. Now we're here. The market traded through that 67.47. She didn't exit. It turned and traded back up, traded above the entry price, but she didn't exit. And she kind of just ended up living through this. And again, this is something many of you can relate to. So now, with position back above the reset stop level, this gives you an opportunity to come in and actually place that stop order if you missed it the first time. So this doesn't always happen, but when it does, it's a really, really helpful thing because it gives you a chance to kind of make up for that mismanagement earlier, okay? So in this case, we want to consider setting or resetting a max loss amount. And in this case, we have not traded through it. So she could go in her platform and put this order in, and that is the final step. Guys, doing all this analysis, this only gets you so far, right? Plotting the data, jotting the time or date you made the trade, jotting the position value, the number from which you're long or short in case of stocks, looking at where the protective stop should be. This is just drawings on a chart. This is not you actually taking action. This is the required preparation for you to take the most important action, which is if you have an underwater trade, you must now take the fifth step here of either adding in or adjusting that protective stop order for the position. Adding it in or adjusting it if it's too far away. So this is where it's specific to your platform. So you would go into your specific platform and put in a stop order. Okay, depending on your platform, it's called a stop order. So this would be a sell stop. Sometimes it's called a stop quote. It is specific to your platform. And if you don't know how to do this, if you don't know how to place a protective stop sell exit beneath the market price, if you only know how to place an order to exit if things go your way, right? Let's say 81.62, if it gets up there, you're happy to, take profits. Well, what if the market doesn't get up to 81.62? What if it goes down below 67.47 first? That is where you can minimize the loss on the trade, as opposed to eating the entire original cost of the position. Okay, if this was 100 shares times 74.96, if we do the math here, 74.96 times 100 is $7,496. If you are long in this trade that you're managing, you do have a limited amount of loss in that it's the value of the entire position. However, if you're managing a short trade that's underwater, that's losing money, your losing potential is kind of limitless. It's a dangerous spot to be in. So we're using the example of a long here. So instead of swallowing this entire $7,496, now that you see the market's gone sideways, or it didn't, do the exact action that your analysis predicted, and you don't want to keep having money sit here and do nothing for you, you want to be able to exit that position so you can go put it in a market that is moving, you've got to bring in that exit order. Again, that step is specific to whatever platform you're on. So these are very, very important steps to consider. that you can apply to manage any underwater trade you have. The example I've used here is for a long trade. And so we want to consider that when you went long the market, in the case of a stock, got chopped around, and you're not fully at $0 per share yet, but you're kind of just hanging out in between and you're not quite sure where to exit. So one guideline that reset that max loss amount, again, it really depends on your trading plan, your account size, your risk to reward, but a general guideline I can kind of start you off with is 10% of your position. Okay, see if you can manage the trade by only giving up 10%. Because think about it, if you have a loss and you only give up 10% of that position, you still have 90% of that original capital to go back and deploy, right? You would have to have a long string of losses for you to lose that entire investment. So that's the point of using a smaller percentage amount for where you protect your trade. So guys, this is a really, really important video for you to come back to every time you want to deploy this process. I can walk you through it like I just did here. Just hit play and follow along. Capture these steps. You can go ahead and take a screenshot if you'd like and keep this by your trading desk. And remember, it happens to everybody. It is part of life. And the way to prevent this from becoming a recurring theme is to trade with a plan, to trade with intention, to trade with clarity, and to trade with strategy. Okay, plan the trade, trade the plan. And if you're in my tribe, I have lots of resources for you to be able to dig into that, no matter where you are in your trading, beginner, intermediate, advanced. So I welcome you to join my tribe and learn more about that. So get back out there, face those trades, guys. It's not as painful as it seems. Face the trades that are underwater, that are losing money, and make sure that you deal with them instead of just letting them rot and destroy your portfolio. So look forward to hearing more from you about what you need to manage your trades, especially during really interesting, unique market times. Remember to subscribe, like, comment, and follow, and share with me what you found of value from this video, and I look forward to seeing you on the inside. You can sign up at the link to join my tribe and get my hot, timely, actionable updates as soon as I publish right to your inbox.